Good morning, everybody. Hey, welcome to Friday. It is Friday, March 4th. I hope you've had a great week, this first week of March, as we get ready to head into the rest of this first quarter, finishing up this month. So that should be interesting with everything that's happening out in the world today with Russia, Ukraine. These things are all impacting our markets, and we have to continue to watch those, as well as the Fed. Will meet sometime this month and give us an increase in interest rates. We'll see what that number looks like as well. So a lot of stuff in March, and we'll talk about that and more when Dave joins us here in just a few moments. Before he does, though, let me just remind you that there's only one thing that we can control. We can't control what happens in Russia or Europe or Ukraine or even in Washington, D.C. However, we can control how much risk you have in your portfolio. Give us a call at 863-382-0037 to schedule your core retirement design, where we can help you design the retirement you always dreamed of. Again, that number is 863-382-0037. With that, we've got Dave coming up next.
9.7 MD is there. Morning Dave is here, which makes me MD, I guess. It's 8:39. 21 here before 9 time. Check in on your money and see what's happening on Wall Street. Boy, I got some really good news on the economic reports out of the government, but my perception is the pre-market traders don't really give a fig. Let's go down to Statler Financial Services' very own Phillip Statler to flesh all this mess out. Phillip, good morning. How are you?
Hey, good morning, Dave. Doing well. I'm not sure you're an MD, but you know that's scary.
Yeah, it can be at times. I agree. Let's start out with the good news this morning. We really kicked booty on the employment front. The unemployment rate, the federal government reports, down to 3.8%. They expected 3.9%. And our hiring just went AP last month. They were expecting 423,000 new non-farm payroll jobs. We created 687,000 and then turned around and they revised up both December and January as well. The employment market all of a sudden has really gotten hot in this country, hasn't it?
Yeah, it really has. I mean, you know, we've been at basically full employment now for a little while, just because of the mass exodus of the job force. So, and the issue is we still have jobs available. There's still jobs out there, a lot of jobs out there. We had that local restaurant that basically said, "Hey, we're closed for breakfast because we can't find a breakfast cook."
Yeah, it's gotten to be a challenge, and we're seeing it locally on a regular basis. I know which one you're talking about. When you see employment numbers revised up 2 months out and increasing by 30-40% over what we expected, it sounds like we might finally be attracting a few people coming out of retirement or non-workforce participants at the very least.
Well, that's my hope. That's my hope, because we definitely have some spots that need to be filled so that we can get back to a regular economy. And if we don't get those jobs filled, I mean, I haven't seen a number yet, but we can't be too much off the 10 million that we've been sitting on for quite a while.
That's true. It's just one of those things. We've got more jobs than we got people, but we're creating the jobs and putting the people online. You get down to 3.8% unemployment rate, like you said. That's well within the range that you call full or actually an overly hot employment market, which kind of gets us back into the notion of what are we going to do with interest rates and what are we going to do to try to cool the inflation rate that's being driven by the demand for employees. And we can't do a whole heck of a lot because we're kind of worried about our buddies over in Ukraine right now.
Yeah, we just have a lot of things, a lot of balls in the air right now. And I just got to say, I don't know that our government is taking aim at the right ones.
I kind of got that feeling. Two factoids kind of illustrate that. Got a report out here. Russia accounted for 7% of our United States oil imports during the year 2021. 7% of our oil imports came from Russia. We're still importing oil from Russia, 500,000 barrels a day. Even though we're cutting them off on everything else we can think of, we're still buying their oil. So President Biden's agenda for today has the announcement of another $54 million in new projects to build electric vehicle charging stations instead of starting to pump more oil. I kind of wonder whether or not somebody's getting the messaging right in Washington right now.
I think they're having a hard time. They just can't see in front of them that what needs to be done. And you and I can talk about it all day long, but it's not going to help anything. And you know, if we're going to put sanctions against Russia, why aren't we still buying their oil?
That's the disconnect that's really hitting me in the process, because we're making it harder and harder to do just about everything else. But oil, oh, never mind, Vlad, send it our way. We still want it.
Yeah, and where's that money going? It's funding everything they're doing right now. So, yeah, that's problematic, and we could be pumping more oil out of our own oil if we would just focus on that.
Yeah, you and I have talked about this off the air before. Okay, if we went in charge, we'd probably end up saying, watch out for the environment, and this is not going to be a permanent thing if we're going to be concerned about that. But, hey, Mr. Oil Company, you know those wells that you capped because we made it a little bit less friendly? Open them up and start pumping like it's going out of style. You may not be able to keep them going for a long period, but at the very least, here's your chance to make some serious bucks fast.
That's right. Yep. So, yeah, and as we look at oil prices heading up towards $112 a barrel.
Yeah, I didn't like that either. Setting the table before we get to what's going on this morning. Yesterday was another off day on Wall Street. The Dow was down another 97 points. S&P was down by 23, and Nasdaq was down a rock-crushing 214 points, another 1.5% down. It's diving quickly back down toward bear market territory again. And I'm guessing right now that the pre-market traders are not really particularly impressed by all that good news on the economic front from an employment standpoint either. We may very well see the Nasdaq back into bear market territory at the end of the week today.
Yeah, the rate we're going right now, there is nothing exciting that's helping the traders out at all. As a matter of fact, we're back to where we were about 15, 20 minutes ago before all the news came out about jobs. We had a brief little reprieve, but we're solidly red across the board.
Yeah, that was probably the good reaction we got when the news came out that no, those Russian missiles did not hit the reactor at that Ukrainian nuclear plant. It just took out the service building for it, so there isn't a radiation leak to worry about at the very least. That was good news, but still it cuts off power to 2/3 of Ukraine, which is probably about the worst possible news as far as progress in the war is concerned.
That's true. I mean, that will definitely be impactful. And the question is, what are we going to do to step up and help? And it doesn't look like we're going to do anything.
That doesn't sound like we're going to do anything a whole lot more dramatic than we already have. It is earnings season, and you and I are both kind of in stinking thinking mode. Have you got any good news out of some big businesses that reported, like, maybe Costco?
Well, here's the deal. Costco did report, and they had better than expected quarterly earnings as well as quarterly revenue. I mean, nothing to bow away from. I mean, they beat by about 20 cents, 22 cents a share on earnings at $2.92 a share. Revenue for the quarter was almost $52 billion. So everything looked good. However, they are trading down this morning almost 2%. And so here's the deal. Costs are going up for them like everybody else. And so, they're a warehouse, a membership group. And so now there's talk about raising their membership fee a little sooner than their normal business cycle. Usually they raise their membership pricing about every 5.5 years. And so now it looks like they're going to do it a little sooner because of inflation. And so I don't know if that's what's putting pressure here or if it's other things. I didn't see anything in the report that made me think it should be trading down this morning.
I did read that they put guidance in that they were expecting things to level out a little bit in terms of sales, but it didn't really sound like a bad news guidance report, just a don't get too excited guidance report.
Well, if you can't get excited, then you go the other direction.
Well, that's the point. Other indications.
So we've got, let's look at a retail establishment, the Gap. The retailer, they had narrower than expected losses for the fourth quarter. And they issued some strong guidance for the current quarter. So that was good news. They did lose 2 cents a share, but that was a heck of a lot better than the 14 cents they were expected to lose. And so good things for them. They are bouncing this morning up 7.5% to $15.31 right now.
Well, that's good to hear, because I'm looking at my list of major leaders, and they're basically all defense contractors.
Yeah, I bet. So then we had Marvel Technology, and not Marvel, the comic book people. These are the chip makers, and they beat barely by about 2 cents a share, I think. And revenue beat the same, but just barely. But that was up. Everything's going the right direction. However, they are. They've got a little bit of expectation issues there for the current quarter. They're trading down 1.5% this morning.
Can you give me one bit of good news as a final report?
Well, let's look at Broadcom, right? Another chip maker. So they beat by not quite 30 cents a share at $8.39. Revenue was ahead of expectations. They gave upbeat guidance for this next quarter. And so that hits them on the positive note this morning, up 3%, Dave. So how's that for finishing off in the green?
I'll take one smile for the morning at the very least. Resetting the table, another off day yesterday, Dow down by a little over 0.25%, ranging to NASDAQ down by a little over 1.5%. 45 minutes before we open, good economic news, stock report news. A lot of defense contractors are on the big winner list this morning. What does it all add up to on the futures 40 minutes early?
Dave, we continue to slide, and we are sliding faster and faster. We got the Dow down 1% right now. We got the NASDAQ down 0.9, and we've got the S&P 500 down a little over 0.9%, not quite 1%. So everything is red. Small cap Russell 2000 is down 1%, and they are falling. So it's not like we're holding anywhere. They are falling as we speak. Commodity side of the coin, we got silver up 0.5%, well over $25 to $25.34. Gold's up a little over 0.6% to $1,948 an ounce. Crude oil up 3.3% to 111.28 per barrel.
Well, poop, and I've been kind of paying attention to agricultural commodities because they've been affected by the Russian boycotts and everything. Corn is past $7.70 a bushel right now, and normally this time of the year you'd expect it to be in the mid-fives as they get into planting season on the futures front. So everything's on its way up, and some of it is in directions you don't want to see it going. Overseas markets, Asia was mostly down at the close this morning. Japan was down by over 2%, so were the Hong Kong exchanges. In Europe, they're looking at that nuclear plant getting attacked and going, oh no, everybody's down big time. British markets are down by 2.9%. French markets are down by 3.5% at this hour, halfway through their days. So I can't even bring you any good news from across the pond this morning. Phillip, we got a situation where it's completely out of our control as to what's going on financially. About the only thing you can control is how much you got at risk. How do I find you to figure out where that is?
Devin, give us a call at 863-382-0037 to walk through our core retirement design, where we help you design the retirement you always dreamed of. Then they can catch us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730 and 95.3 FM.
And back here on Monday morning, where we cross our fingers, we're going to have some good news to report. Fair enough?
I hope so. I'm looking forward to some good news because these markets really need it.
Yeah, this is really turning into a bummer of a time when we start talking about everything being in red ink. You have a dynamite weekend, and I'll see you on Monday. Fair enough?
Thanks, man.
Thank you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. I really appreciate it. I hope that other than the markets being not very pretty, that you had a great week, and I'm prayerful you'll have a great weekend. Hey, until Monday, we'll talk to you then. Bye now.